Welcome back to 2022 and hopefully the beginning of the end of the pandemic. The Omicron variant emerged during the Delta COVID wave in the Northern Hemisphere. The good news is that while Omicron was highly contagious, it resulted in less severe symptoms than previous strains, and Omicron appears to be crowding out the more dangerous strains. Despite new COVID-19 variants and inflation worries rattling investors throughout 2021, accommodative monetary and fiscal policies supported sentiment in the key advanced economies. The volatility index, or the fear gauge, ended the year 5.5 points lower, dropping nearly 6 points in the final quarter of 2021. 2021 was a good year for risk assets. The MSCI World Index returned a welcome 29.5% in Rand terms. The US market rose for a third consecutive year, with the S&P 500 delivering 27% for the year in dollar terms. Europe also supported gains in the developed market composite, while Japanese markets lagged. It is worth noting, though, that the stellar US return was concentrated in the 6 largest companies, the likes of Apple, Google, Microsoft, Facebook, Amazon, and Tesla. The MSCI Emerging Market Index underperformed its developed market counterpart, primarily on the back of supply-side shocks. The performance across the different emerging markets was quite diverse due to the contrasting healthcare systems, varying government responses, and a difference in capacity to provide both monetary and fiscal support. The Rand weakened by some 9% over the year, which benefited domestic investors' offshore component, and global property continued a strong flowing, up 38.5%, as the globe continues to learn how to live with the pandemic and a possible transition to an endemic looking more and more likely. The local equity market followed global markets higher and posted the strongest return since 2009, up 27% for the year, despite Naspers declining some 18%. The performance was driven by some spectacular individual stock performance, the likes of MTN up 184%, Richemont up 88%, Cecil 93%, and Anglo's up 46%. The pleasing aspect of this return outcome was that the contributions to returns were broad-based across most sectors, unlike the narrow market breadth experienced in the US market. The interesting aspect of this outcome for the capped SWIX was that 2021 represented the first year that the Naspers process combination was a detractor, and a material one at that, with a negative 2% return from the total return of the capped SWIX. Our factor range of portfolios delivered credible returns for the year. Returns ranged from 17% to 25.5% during this period, with the exposure to growth asset classes driving most of the returns. Our overweight positions to both local and global equity contributed to returns, whilst the underweight positions to local and global property detracted somewhat. These returns were comfortably ahead of inflation and the respective benchmarks for the year. Most of the alpha during 2021 was driven by tactical asset allocation decisions, as well as our allocation to value equity strategies and flexible bond strategies. At the back end of 2021, we reduced the global equity overweight position in favor of both local equity and bonds. We at Momentum Investments continue to do what we have always done, and that is to remain anchored in our OBI philosophy and process. We are confident that our portfolios are well positioned and suitably diversified across asset classes and strategies, and we will continue to manage the portfolios in a prudent manner. Thank you for your time and look forward to catching up with you again soon.